Good morning, everybody. We have a sharply lower trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. We have December corn futures down 8 3/4 at 407 1/4. November soybeans are down 14.5 cents at 1067 3/4. December Chicago wheat down 9.5 at 606 1/4. December Kansas City wheat down 10.5 at 538 3/4. December spring wheat down 7.5 cents at 554. So we had kind of a poor close in the row crop markets yesterday. Both the corn market and the soybean market went up early yesterday. They made fresh highs for the move and came back, finished the day lower. We've got some selling pressure here this morning. I'm not necessarily sure at this point that there is one particular reason for this broad sell-off across the grain complex this morning. I know in the case of the wheat, I think that the weather and the rains across the southern plains in particular are responsible largely. In the row crop markets, we may have simply been due for a correction, although I wouldn't be surprised to maybe see some bearish news of some sort that corresponds here at some point, maybe later today or tomorrow. In any case, rains over the U.S. southern plains have definitely hurt wheat prices this week. When we came in Sunday night and into Monday, we saw a fairly significant shift in the weather forecast. There's a lot of precipitation, both rain and snow, added for the U.S. Southern plains, and we've seen a lot of that come to fruition already. If you look at the last 72 hours, there were quite a bit of the Texas Panhandle, quite a bit of Oklahoma caught the equivalent of anywhere up to 1 to 2 inches of rain over the last 72 hours, and I know a lot of that was snow as well. But we've got some more on the radar this morning. That system is going to exit to the east over the next day or two, and you may see some dry weather return in the extended forecast. But this rain in itself, I think, was enough to certainly cause a correction, if not put a top in that wheat market. We will see a ethanol report from EIA later this morning. Weekly ethanol output has really stagnated here, and it's not returned to where we'd like it to be. The 4-week average is about 6% below the same period last year in regard to ethanol production. Gasoline demand was down almost 14% last week versus the same week the prior year. So you've still got lockdowns, you've still got restrictions. Because of COVID, you've still got reduced driving habits. You got a lot of people working from home, and you're starting to see some of this stuff emerge again in some of the big metropolitan areas around the country. You're starting to see more restrictions and lockdowns, and that's even happening around the world too. There are countries that are instituting fresh lockdowns and restrictions. So this hasn't helped ethanol at all. The other thing that it's hurt is the U.S. stock market. Stock market is sharply lower again this morning. At yesterday's close, the S&P had lost 5.5% from its October 12th high. It's about 5.6%, or no, got to be more than that, from 6% below the all-time high posted on September 2nd. So we've sold off pretty sharply. There's two things here. The first one is that President Trump has essentially conceded at this point that there's not going to be any additional coronavirus stimulus prior to Election Day. And yeah, I know Election Day is 6 days away, but the market wants this stimulus and thought at one point that it was going to get it. And now we're not going to see it until at least after the election. The other thing is, again, these renewed lockdowns and restrictions. That stuff's not good for the economy. U.S. exporters may begin selling soybeans to Brazil. It was reported that at least one cargo was sold to Brazilian buyers last week. Several other buyers are reportedly interested in some U.S. beans, according to an article in Bloomberg yesterday. Brazil is dealing with essentially a domestic shortage of soybeans. They shipped a record amount of beans to China this past year, and they're just in kind of a period where they're out of physical beans. They've got a big crop in the process of being planted. They're in the process of planting record acreage. Barring a big weather issue, they'll harvest a record crop in February and March. But for the time being, they've got a shortfall. So there's a possibility that we may sell some beans out of the U.S. and ship them to Brazil. There's chatter that some of that may have already taken place. So I don't think there's going to be any huge amounts. Brazil knows that they've got a crop coming, but they may need to kind of fill the gap here for the next few months. A couple notes on the carry in the corn market or lack thereof. There's only a penny a carry from December to March in corn. Even from December out to July 21, it's 3 cents this morning. For those of you who have existing December corn futures that you're short or existing December HTA contracts. A lot of you with storage had probably planned on taking these and rolling them forward and capturing carry, and that's an opportunity that's just not available right now. There is still the possibility that we could add some carry into this corn market between now and the time that December futures expire. Do we go back to 25 cents of carry from December to next July? Probably not. Could it get to 10 or 15? That's possible. Anything's possible here. We saw a very sharp run up in the spreads. That spread from December to July 21 bottomed at, I think it was 27 cents in August, and it was as wide as 20 cents in just early October. So things have really changed here, but it could change and shift the other way just as quickly. So we've got to keep an eye on that situation, especially if you're somebody with storage and you've got existing futures or HTA contracts. The corn market again sharply lower this morning. We made that fresh high for the move yesterday, not a contract high. We got within 2 cents of that 424 contract high in the December contract and then backed off. So not a great action, some follow through this morning. We may just be due for a correction here. We've got an incredible amount of fund length. We've had an incredible run to the upside. For there to be some sort of run-of-the-mill correction here would not be out of the ordinary at all, given what we've just seen. Soybean futures are 25 cents removed, more than that, more than 25 cents removed from yesterday's highs early this morning. The demand story is still good, but if you start to hear hints of China ceasing purchases or reducing purchases, that would be bad. The Brazilian situation appears to be improving, and that's a factor that should limit down a demand down the road. Barring a Brazilian crop failure, it's probably not a question of if China stops buying U.S. beans and shifts to Brazil. It's just a question of when, and does that start to happen in the next 2 weeks? Does it start to happen in the next month? Do they wait until December, January, February? I mean, you really don't know. And of course, the one thing that could change that would be a big time crop problem in Brazil, which is not the case right now. Wheat, again, all about these rains and snow and precipitation that just wasn't in the forecast a few days ago. Cattle market finished yesterday higher yesterday. I would say that the performance this week is pretty good, given what I would call kind of a negative cattle on feed report. So we'll see what develops in the cash market. Again, in the stock market, we are sharply lower again here this morning. The S&P is down almost 50 points. The Dow is down almost 500 points ahead of the cash open. The bonds are up. U.S. dollar is sharply higher. Crude oil is down $1.94 at 37.63. Gold's down almost $20. Silver down. So you've got some weakness in some of these outside commodities as well. Remember, if you'd like some more information, visit my website. Go to standardgrain.com. Click on Grain Marketing Plan. Check out that subscription service. Tune in later today. I'm going to have an episode both on the podcast and on YouTube regarding China, and I'm going to have a guest. My friend Ken Morrison is going to be on, and we're going to talk about the China situation in regard to corn, in regard to soybeans, in regard to the trade deal. Should be interesting. Make sure you tune in for that. It'll be uploaded to all the podcast apps and to YouTube after that live stream at noon Central Time today. Everyone have a great day. I will talk to you same time tomorrow.